Today, I have the pleasure to have Francis Cortellino. Francis is the economist at CMHC. Welcome, Francis, to the podcast.
Thank you for having me.
It's my pleasure. Tell us, before we start, I just want to tell us what is the mandate of CMHC?
Yeah, that's a great question. So we do a lot of things at CMHC. So we have a business side where we're going to ensure a mortgage for homeowners, but also on the rental segment. We also do, in my case, some research or market insights to look what's going on in the market. So there's many departments with many different objectives, but in my case, it's to look at what's going on in the housing market in the province of Quebec, to monitor indicators, and to also try to do forecasts at least of what's will be coming in the next few quarters for that housing market.
Good. How's the overall market right now in Montreal in regards to housing? Is it a little bit better than last year?
So if we look at, we'll start maybe with the resale market. So people who want to buy a single family homes or a condo. So I would say the demand is a bit weaker this week compared to last year. We know that there's a lot of uncertainty in the economy right now. Also, the mortgage rates are increasing a bit faster than what we were expecting at the beginning of the year since the conflict in the Middle East. So mortgage rates are a bit up. So it's maybe a bit harder to now have a mortgage to buy a home. Once again, that uncertainty, labor market is, I would say, unemployment rate is a bit higher than what we were expecting. So the demand is a bit weaker. There's also a bit more supply in the market. So the listings on the market are a bit more important. So we're starting to see, I would say, see a price growth decelerating. So there's still positive price growth. So prices are increasing in Montreal, but not as fast as last year, especially in the condo segment, where we're seeing a bit more supply than last year. And with that weaker demand, now in the greater Montreal area, I would say the price increase is only around 1%. And last year was a bit higher than that. So we're seeing maybe a market that is a bit more soft on the resale market for sure.
How is it in the other cities like Toronto and Vancouver?
So I would say the market is even softer in those two cities. So the condo market, as you can imagine, is quite difficult in those municipalities or those metropolitan areas. So we're seeing sales going down, or price also, especially in the condo segment, not being that strong. So Montreal, I would say the market is a bit softer now than last year, but once again, it's a bit more active than what we're seeing in other places like Toronto and Vancouver.
How many houses did we build in 2025?
Yeah, so if we go now to the housing starts in our case, so on housing starts in our case, is when the excavation is done and they've poured the concrete. And if you have, let's say, a building with 100 apartments, that's going to be 100 housing starts. So we're looking at a number of doors of dwellings that are created, basically. So last year in Montreal was quite a good year, around 28,000 housing starts. Before the pandemic, we were around maybe 25,000 housing starts per year. So 28,000 was a great year, but we need to go back in 2023 when the interest rate started to increase by the Bank of Canada. It started in the spring of 2022, but continued in 2023. Builders also were caught with important cost increase during the pandemic, the supply chains problems, the wages, the materials, everything was more expensive. So when the interest rate started to increase, and with those important costs, construction costs, in 2023 in Montreal, there were only 15,000 housing starts. So that 10,000 housing starts less than what we had before the pandemic on average. So it was not a good year in 2023, but 2025, with interest rates getting lower, also different level of governments also tried to stimulate the creation of new dwellings. So in 2025, we had 28,000 housing starts in the greater Montreal area, which was, I would say, quite a good year if you look at the historical numbers.
So what's the average it's per year that they have to build, that they want to build?
That's a good question. So I would say that the developers are looking at the economy, at the demand. And the problem is that when you look at the demand, is that when you create new dwellings, multi-res apartment, for example, often those buildings will need 3 to 4 years to get approved, to get all the permits, to finance it. So when you have an housing starts, when they are actually starting to do the excavation and pour the concrete, this is decisions that were taken maybe 3 to 4 years ago because they need all the approvals, the plans, and everything. So the demand is always quick to adjust, but supply, it takes a longer term because creating a huge high-rise building, it takes a lot of time, it takes a lot of planning, and you need all the approvals from the municipality. So I would say that normally at this point in time, we're expecting 2026, a lot of housing starts once again, maybe not as much as last year, but we're expecting a bit less, maybe what we had before the pandemic, around 25,000 housing starts per year. But in the next few years, maybe it's going to decrease a little bit. Most of the buildings being built right now in Montreal are for the rental segment. And we're starting to see vacancy rate increasing in Montreal, especially in the newly built rental apartments. There's a lot of competition out there. The demand is also getting a bit weaker because we don't have that population growth that we used to have a couple of years ago. So with all that supply coming to the market and a weaker demand, we're starting to see vacancy rate increase in the rental segment, especially in the newly built. And if you're driving around in Montreal, you're going to see a lot of different rental buildings, and you're going to see a lot of ads on incentives giving 1 month or 2 months without paying any rent because they're trying to attract tenants. So the market is a bit more now difficult for developers. So this is why we're expecting in the medium term that some of them will probably delay new projects because the demand is now weaker than what was a couple of years ago.
It's the same thing with the condo market too, eh? They're giving free rents, I hear.
Yeah, the condo market. So a couple of years ago, Montreal was building a lot of condos. We go back 10, 15 years ago, and the greater Montreal area, there were maybe around 10,000 condo starts per year. But what happened 10 years ago, 15 years ago, there was a slowdown in the demand, and builders were stuck with a high number of condos that were built, but that were unsold. So at that time, they decided to maybe delay new project or cancel projects because they needed to sell those units that were unsold. And what they did, because the condo market was slowing down, they looked at the rental market and they said, okay, it's been a long time since we didn't build any rental units on the market. The vacancy rates are quite low. It's maybe a good time to do more rental units. And there was a shift from developers from the condo market to the rental market 10 years ago. And in the last few years, it's been only rental, and there's almost no condos being built in Montreal right now. So I would say that everything, if you're driving around in Montreal, you see a crane out there building something, it's probably a rental structure being built and not a condo structure.
Yeah, I hear it's not that profitable as it was before. So that's a problem too.
But one of the main challenges that developers are telling us for the condo market is that I was talking about the important construction cost increase in the last few years. So if you want to bring a new condo to the market, the price you need to put on that new condo, will be way higher than a condo that maybe you can find on the resale market on Centris. So if you're a potential buyer and you're looking at buying a new condo or an existing one on Centris or MLS, often it's probably 20-30% cheaper per square foot to buy a unit that was built 5-10 years ago. So all of the demand right now for condo are going toward the unit that were built maybe 5 to 10 years ago because it's less expensive than to buy a new one. So when you buy a new condo, maybe some people are okay to pay a bit more because it's new. But when the gap is 20, 25, 30% to buy a new condo versus an existing one, but the demand is not there. And this is why there's not a lot of condos being built right now in Montreal.
When do you think there's going to be a turnaround?
That's the good question. If I had the answer, I would like to answer it. But when I talk to developers, a lot of developers would like to go back to the condo segment. They would like to build condos again because they're seeing that the rental market is softening. They're seeing those vacancy rates increase. They're seeing that the demand is lower than what they used to have in the past. So they would like to build condo again. I would say the main challenge right now, once again, is that to build a new condo, is that the price you need to put on that new condo will be way higher than what you can find on Centris, so a condo built at 5-10 years ago, an existing one. So a lot of developers would like maybe in 2 or 3 years, if the price can continue to increase on the resale market, that could close a bit the gap between the price of a new condo and an existing one. As well, they would like also to see construction costs maybe be flat, not increasing a lot. So that could help them, once again, to put a price on a new condo that would be more close to what we can see on the resale market. So a lot of developers would like to do condos right now. The conditions are not there at the moment. Maybe in 2 or 3 years, we could see maybe a small rebound, but it's a bit too early to say if that will be the case.
I believe it's still the same in the multifamily space too. It's not that profitable right now too. So what do you have to say about that?
Yeah, that's maybe at the moment, developers are trying to look at different options. So they're looking at the multifamily segment. There's a lot of competitions out there. You have all those incentives that are out there to attract tenants because there's so much competition. They're looking at the condo market. The demand is not there at the moment to buy new condos. So this is why maybe we're expecting in the medium term a decrease in housing starts because there will be probably fewer products that will be able to be interesting for developers. The only segment where we're hearing that there could be a rebound is the retirement home segment. So before the pandemic, we used to have in the Montreal area, maybe, I don't know, it depends on the year, but maybe 2,000 to 4,000 apartments in retirement homes being built every year. But during the pandemic, it went down drastically because if you remember the confinement, people were kept inside those retirement homes. So the demand wasn't there anymore. People didn't want to go into those residences. However, an aging population is still aging. So people are still getting a bit older. So because no retirement homes were built in the last few years, there were no new supply on the market. And the demand now is still increasing because people are getting a bit older. So people in that industry are telling us that the vacancy rates in retirement homes now are quite low. So maybe the next few years, we could see a rebound in the construction of retirement homes that was, once again, there was no activity during the pandemic. So maybe we could have a small rebound in the retirement home segment. I would say the only challenge is that it's only a couple of industry players that can do retirement homes because building a retirement homes is not like building normal apartments. You need also an operator to operate a retirement homes because you're gonna have a nurse, you're gonna have a lot of amenities, different services. So once again, it's two different things: building purpose-built rental structures for people in their 30s, 40s, 50s, and building in a retirement home because now you need also an operator to operate that rental structure.
Another challenge that is out there is immigration. So it has slowed down. So I don't know when it's going to pick up again. So how's that going right now?
So in the last few years, we had record population growth in Canada and also in Quebec, the Montreal region. A lot of people coming from abroad, especially not permanent resident, but especially what we call non-permanent residents or temporary immigrants. So that would be international students, temporary workers from abroad, and also asylum seekers. So most of the increase in the last few years was coming from that group. And at the moment, we're seeing an important decrease coming from that group. And it's probably going to last for a couple of quarters until 2027 or beginning of 2028. So we're going to see a huge decrease coming from that group. Permanent residents as well, we're going to see probably a small decrease in the next few years. So this is why we're expecting for the Montreal region in 2026, 2027, and a good part of 2028, probably no population growth in Montreal. So in the case where there are no more population growth, and you got all those, once again, rental units coming to the market, we're going to have a lot of units, once again, in 2026, 2027, that will be delivered to the market. So without any population growth, this is why we're expecting the vacancy rate to increase in Montreal because they're going to be a lot more supply than demand at that time.
One thing when the builders do the multifamilies in regards to the affordable housing, we're not really in lack of affordable housing because when they spend when they build those houses, it's brand new, so it's expensive. So there's a market for that, but it's still not affordable for the average person. So how do we deal with that?
Yeah, so those units that were recently built are way more expensive than what than the average rent for if you look at all the apartments, for example, in Montreal. So they are more expensive, but at the same time, when you look at the population growth we had in the last few years, now it's decreasing, but a couple of years ago, population growth was at a record level. So imagine that we didn't build any of those rental structures in the last few years. You would have all those people coming from abroad or other regions in the Quebec province looking for an apartment. And if nobody had built anything, the problem would be even bigger and the pressure on rents would have been even higher than what we had in the past. So bring more supply to market, bring more units was a good idea because it helped at least to remove a bit all the pressure we had from that population growth. But at the same time, we need to be aware that not everyone, as you were saying, can afford those kind of apartments. So this is why I think that there's many different level of governments or try to put some programs or products out there to create those new affordable units for on the market. And on that, if you go back to the population growth decreasing, a lot of supply coming to the market, what we found in our latest rental market survey that we did in October of last year is that even if you look at the rents that are less expensive, so the rents that are maybe in the bottom 20%, 25%, so the vacancy rate are still quite low for those apartments, but the vacancy rate also increased in that segment last year. So I would say that with lower population growth and more supply on the market, we're seeing that even for the least expensive units, the vacancy rate is increasing a little bit, but it's still low. So for example, last year, maybe it was 2 years ago, maybe the vacancy rate for the lowest the lower range apartments in terms of rents were 0.5%, the vacancy rate. Now it's 1.5%. So it's still quite low, but at least it's increasing. So there's a bit more option than what we had maybe 2 years ago. So I wouldn't say it's easy to find an apartment that is affordable right now, but maybe it's just a bit less difficult than what we had 2 years ago.
What is the average rent right now, let's say for 4.5 or 3.5?
So if you go, the thing is when you look at the average rent, so all rent that exists in the Greater Montreal area for two, that would be around $1,400 per month. However, that's an average of all the units, and most of the units are occupied by tenants that have been in an apartment for many years. So this is why it can seem low a little bit when you say $1,400. If you go look at on websites and you're looking at units that are vacant and you look at what is the rent, often you're going to see mostly $1,800 per month, $2,000 per month, and even for a newer unit. Even in the suburbs of Montreal, it's now close to $2,300 per month. So that $1,400 is a big average. Probably it's capturing a lot of tenants that are in their units and have been there for many years. But if you look on websites and you're looking at units that are vacant at the moment, for sure you're going to see higher rents on those websites.
I think I saw something recently in the news. There was a trend that people are moving now from the city to the suburbs. Do you think that trend is going to continue?
Yeah, so I would say if you look at the island of Montreal and you look at people moving out of the island of Montreal and people coming from elsewhere in Quebec to go on the island of Montreal. So since we have the data in 2001, Montreal always had negative. There's always more people leaving the Montreal Island to go elsewhere in the province of Quebec. The suburbs are even further away than people leaving another region in the province of Quebec to go live on the island of Montreal. So it's always been negative. During the pandemic, it was probably the highest negative that we had. I think it was 40,000 people leave the Montreal Island during the pandemic. It was 3% of the population of Montreal that left, so that's a lot. But in the last 2 years, it's been decreasing, going back to what we had, I would say, before the pandemic. So at the moment, there's probably per year around 25,000. The net loss for Montreal has been 25,000 people per year. So people are moving to the suburbs. Some of them will say is going to buy, I would say, a single family home. That's the most common thing that people will do when they move out of the island of Montreal. They're going to move to the suburbs a bit further away. They're probably in their 30s, more or less, with kids or no kids at the moment, and they're going to buy a single family home. But some of them will also rent an apartment. And once again, this is something that we're seeing since the last. We've been seeing it for the last 25 years. So we could expect that it's going to continue in 2026 and so on.
Do you think for the builders in the future, in regards to permits and all that, like the whole process of getting access to the permits, because it's very long to get permits, do you think that's going to change in the future?
But I believe that a lot of municipalities are trying to improve. So we've seen a lot of municipalities in the last few years doing a roundtable with developers, having those discussions to see how they could improve. And when we talk to developers, they would say, but it's not perfect yet. There's still improvement needed in different municipalities, but it's a bit better than what we used to have in the past. And that's a good thing, because if approval process are easier or also faster, it means that you can bring more supply at a lower cost on the market. So at the end of the day, I think bring more supply, it's what we are aiming for.
You think interest rates are going to keep going down this year, or it's going to stay stable?
So if you look at the variable rate, most forecasters are expecting it to remain stable in 2026. An increase is possible next year. As for the 5-year fixed rate, for example, we were expecting at the beginning of this year to remain stable compared to 2025. However, since the beginning of the conflict in the Middle East, there's a lot of, I would say, inflation expectation that inflation is going to increase. So we saw the 5-year fixed rate increase in the last few weeks. How long that the show is going to last, it's hard to say. But for the moment, the mortgage rates are a bit higher than what we were expecting at the beginning of 2026. So that makes it a bit harder maybe for potential home buyers at the moment to find a home.
Okay. Thank you, Francis, for your time. It was really appreciated. Anywhere people can follow you? Do you have a blog or any social media?
No, they can find me on LinkedIn, I would say. They can type my name in LinkedIn. With my last name, I'm probably one of I'm one of the few people with that last name, so they can find me easily on LinkedIn, probably.
Okay. All right. Thanks, Francis, for your time. It was nice talking to you. On that note, everybody, thank you for taking the time to listen to the podcast, and we'll see you on the next episode. Bye.